Very, very good morning to all. So today is our last lecture for FEMA. So before starting the last concept that is called external commercial borrowing, first confirm me whether the voice and audio video is absolute clear. Is there any problem in audio video? Kindly comment. Audio video is perfect. So look at that, we can start the last concept of FEMA that is called external commercial borrowing. Little bit complex, but quite easy also. So can somebody confirm whether audio video is perfect so that we can start the concept of ECB, external commercial borrowing? Okay, fine. So we are going to start the external commercial borrowing, but before going towards the external ECB part, first we will check like what we already completed, what topics we completed in FEMA part. So first we completed the applicability part. Applicability part stands for we completed section 1 part, and section 1 talks about the applicability of FEMA. Like FEMA applies to whole of India. It applies to all branches, offices, all agencies which are outside India but controlled, owned by a person resident in India. From this point, we came to know that section 2V is the most important part, because that definition part deals with the person resident in India. If a person, if we need to check that whether a person is a person resident in India or not, so we need to we need to check the two conditions. Like first, he should be a person resident for more than 182 days in the previous financial year. Second point, he gone out of India, but other than for 3 purposes, or he came back to India for these 3 purposes, then only he will be treated as a PRII. Then we started with the definition of correct capital account transaction, authorized person, currency, foreign security. That all important definition we already discussed in first lecture. Then we started section 5. Section 5 deal with the current account transaction. Now, what is current account transaction? So there are 4 points. Basically, law has prescribed current account transaction are those transactions which are not capital account transaction. It includes 4 points. So these are the current account transaction. In current account transaction, we gone through the 3 schedules, schedule 1, 2, 3, which deals with certain transactions which are in prohibited nature. 7 to 8 transactions are there with respect to prohibited current account transactions. Like for example, lottery winning, payment for callback services, dividend payment to whom dividend balancing is applicable, right? So these are certain points which are prohibited with respect to foreign exchange transaction. Means government will not provide you foreign exchange to execute such transactions, right? Then schedule 2 deals with the certain transaction, prescribes for approximately 9 transactions, which deals with the current account transaction on which you need to take the approval of central government. And for this, there are 2 transactions that limit is prescribed for 2 transactions. First is advertisement in foreign print media up to $10,000 that is allowed, or a sponsorship program up to $1 lakh that is allowed. If you require more than this amount, you need to approach to central government before for taking approval before executing such transaction. Other than this, there was a concept of cultural tour, right? We need to pay the shipping charges to as exceeding the rate prescribed by the DGFT, Director General of Shipping, right? So these are the certain transactions which require the approval of central government. Third schedule deals with certain transactions that's divided into 2 parts. First for individual, second for other than individual, means deals with the corporate part. For individual, 9 transactions for which government provided an ad hoc limit of $2.5 lakh. Government will provide $2.5 lakh and you can execute such transaction, or you can consume whole dollars in, for example, immigration, for example, employment, maintenance of close relative abroad, right? These are the certain transactions for which schedule 3rd is there. If a person wants to have If a person want more foreign exchange, then he need to approach to Reserve Bank of India for their approval before executing such transactions. Other than corporates, there are 6 to 7 transactions which deals with respective limits will be prescribed under this schedule. For example, creation of shares, there was a concept, payment of commission on for sale of residential flat, right? So these are the certain transaction or consultancy project, 1 lakh, 10 lakh dollars, that limit is prescribed for individual transaction. Section 6 deal with the capital account transaction, certain transaction for which that capital account transaction exclusively prohibited. For example, for agriculture, for chit fund business, for Nidhi company, for plantation, these all are prohibited. But there are certain transaction, two types of transaction for which foreign exchange is permissible. First is amortization of loan, means payment of EMI. If you took any loan from outside India and for which you need to pay the EMI monthly basis, then government will provide you foreign exchange. By default, that is permissible. Or on payment of depreciation on direct investment outside India, for these two transactions, that is permissible. Section 7 Section 7 deals with the export of goods and services, for which we refer to 4 charts from this section 7. Export of goods and services, in which form there are 2 types of EDF and SOFTEX. SOFTEX deal with the software part. Government, RBI specifically provide instructions like you need to realize and repatriate foreign exchange as soon as possible without any delay or without any act which reduces the foreign exchange to be received in India. Section 9 deals with the realization, repatriation. 8 and 9 both deals with it provides the limit also. Section 10 deals with the authorized person. Authorized person defined in section 2C. Authorized dealer, money changer, offshore banking unit, any other person to act as an authorized dealer, to deal in 2 type of things, foreign exchange and foreign security, right? Then we gone through the duties and comply with the RBI regulations and all, right? Section 11, Section 12, Section 13, that all section deals with the penalty part. And penalty part deals with respect to what? There are majorly there are 2 important concepts. First is appeal to special director appeals or appeal to AT. AT stands for appellate tribunal part. Section 515 deals with the compounding of offenses, right? Section 13 prescribes the certain penalties, like if you can recall 10,000 to 2,000 rupees per day. So that is certain kind of penalty which is prescribed for the contravention of this provision of this act, right? So these are the penalty part. Then we proceed towards the export of goods and services, that fall under the transaction of section 6, that is called capital account transaction, right? Then we completed the ODI part. ODI means overseas direct investment. Okay, so today we are going to start. FEMA is a very little topic, but it requires a little bit more consideration. Okay. So we are going to start the ECB part. ECB is the last topic as far as topic CS syllabus is concerned. ECB. So can we start the ECB part? Can we start the ECB part? Can we start the ECB part? Can we start ECB part? Okay. So external commercial borrowing. Now, let's break that concept of ECB. So external commercial borrowing means we are going to take some borrowing, and the nature of the borrowing is commercial, means we will use in our business, and we are taking that borrowing for a commercial nature. Externally means whenever we are concerned with the FEMA, externally means we are not concerned for outside the state or outside any particular city. We are talking for the export import part, means outside the India country. So ECB are the commercial loans. What we are going to raise? We are raising the commercial loans. Raised by eligible resident entity means they define the word eligible resident entity. Means all are not eligible to raise that ECB part as far as FEMA is concerned. So they define eligible resident entities from recognized non-resident entity. Means these 2 points are more important. First of all Indians are not eligible to raise money from outside India under this ECB. So they define eligible. And from whom we are going to raise, that is also prescribed from recognized non-resident entities. Means any person cannot borrow any amount in a commercial nature from anybody outside India. So both are defined, like who is going to raise and the person who is lending that amount from outside India. Now that the person who is raising and the person who is lending that money should conform to parameters such as minimum maturity. What is the minimum maturity? The fund you are providing to the Indian persons, permitted and non-permitted end use. After procuring such loan from externally, what is the purpose? For which purpose you are going to deploy that fund? Maximum all-in cost ceiling. What extra cost? Like for example, if we are taking some loan from any bank or from any NBFC, they will charge some file documentation charges approximately that will accrue as suppose 3 to 5% of the total loan amount. So that is called all cost ceiling. The parameters given below apply in totality and not on a standalone basis. Means that parameter you need to comply cumulatively. That is not restricted to fulfill any of the condition. Means whatever minimum maturity is prescribed by under the FEMA, that you need to comply, permitted and non-permitted end use, that is also prescribed. So government is identified that if an individual resident in India wants to raise any loan from externally for a commercial purpose, then they can take from recognized lenders only. Okay, with certain parameters. Now, ECB framework. The framework for raising loans through ECB, herein referred to as a ECB framework, comprises the following 2 options: currency of borrowing, forms of ECB, eligible borrowers. You need to comply that respective points while raising funds from the concept. Okay, right. Along with this, we will see the theory part also. Okay, so this is your study material part. You can refer for ECB part. Okay, so this is your ECB guidelines part. Framework for ECB. Framework for raising loans through ECB. Transactions on account of ECB are governed by Section 6. And whenever we are going to see this Section 6, it means we are talking for capital account transaction of FEMA. Obviously, we are raising loan. So loan will hit our balance sheet. So we will definitely fall under, that will definitely fall under the capital account transaction, right? ECBs are commercial loan raised by eligible resident entities from recognized non-resident entities and should conform all parameters such as minimum maturity, permitted and non-permitted end uses, maximum all-in cost ceiling. The parameters applies in totality and not on standalone basis. I think so. First para is clear. Like in the first para, only 2 words are important. First is who are eligible resident entity, and second is who are recognized non-resident entities who are going to lend the money to the Indian persons. Now, the term all-in cost include the rate of interest. What rate of interest you are going to offer to our Indian residents? Other fees, expense charges, guarantee fees, whether paid in foreign currency or Indian rupees, but will all not include commitment fees, prepayment fees, charges, withholding tax payable in INR, right? So that all comprises of all in cost. In case of fixed rate loan, the swap cost means the change cost, exchange cost. The swap cost plus spread means difference between rate, should not be more than the floating rate plus the applicable spread. Additionally, for FCCBs, foreign currency convertible bond, the issue related expenses shall not exceed 4% of the issue size. Like, so what they have mentioned, in case of FCV, the issue related expenses. Suppose my company is going to issue foreign currency convertible bond, right? That will issue to the foreign in a foreign country, so that foreign subscriber can subscribe, and accordingly we will raise some amount. So what the law has prescribed, in case of FCCB, the issue related expenses means the prospectus expenses, means the expert opinion report, whatever expenses you need to incur for the launch of this foreign currency convertible bond. So that maximum capping they have provided, like 4% of the issue size. And in case of private placement, these expenses should not exceed 2% of the issue size. In case of issue related, in case of issue means public issue we are talking for, it is 4%. And if this relates with the private placement, means you are going to offer to selected group of investors, then this is a 2% of the total issue size. Now, there are in the ODI concept, we already gone through two concepts, that is called automatic route and approval route. What is automatic route? Automatic route means we need to comply 1, 2, 3, 4, 5 conditions as prescribed by the authorities, by the government, and that we can execute such transaction. In approval route, we need to take the approval of respective authority, either the central government or any concerned authority or Reserve Bank of India. So, approval route. Under the ECB framework, ECB can be raised either under an automatic route or under an approval route. Under the approval route, the prospective borrower are required to send their request to the Reserve Bank through their authorized dealer bank for examination, right? So in this, they need to take the approval. Automatic route, for the automatic route, the cases are examined by the AD category 1 bank, right? So there is a category authorized dealer. So first category of authorized dealer will examine your application part. ECB framework, the framework for raising loan through ECB, herein referred to as a ECB framework, comprises of following two options. Two options means foreign FCY denominated ECB, INR denominated ECB, means you are going to take the ECB in foreign currency or Indian rupees. So first is currency of borrowing. Right? So parameters, currency of borrowing. First is foreign currency, any freely convertible currency, or Indian rupees. So you need to check which one, in which form you are going to take. Now, form of ECB, FCY denominated ECB, you can take in the form of bank loans. So second topic deals with form of ECB, means whatever amount you are going to take from outside India, in which format means that consists of fixed rate of return you will provide for this amount as a loan, or what kind of investment the foreign entity will do in your company. So FCY denominated ECB loans, including bank loans, whether fixed or floating rate notes, bond, debenture, other than fully and compulsory convertible instrument, or they will provide in the form of trade credits beyond 3 years, FCCBs, FCEBs, foreign currency convertible bond, foreign currency EBs means exchangeable bond, and financial lease, right? So you need to provide, you need to check, like you are going to take that amount in which format. INR denominated ECB loan, including bank loan, same point, floating fixed rate note, bond, debenture, preferentials. If you can check in case of FCY, there is no concept of preferentials, but if you are going to take ECB in INR format, then you can also make investment in, then they or can also make investment in preferentials. Sorry. Other than fully or compulsory convertible instrument, trade credits beyond 3 years, financial lease, also plain vanilla rupee denominated bonds issued overseas, which can be either privately placed or listed on exchange as per the host country regulation, means foreign country regulation part. Okay, so these are the first 2 points. First is currency of borrowing and second is form. So in which currency you are going to take that ECB, in which format you are going to take that ECB. So these are the 2 points, currency and form. Okay. I think so first and second point is clear. Plain vanilla bond, that is you can refer to your FM part. Okay. Third is most important part. First and second are basic part, right? Third is eligible borrower. Mean Indian entity we are talking for. All entities eligible to receive FDI. FDI means foreign direct investment. Further, the following entities are also eligible to raise ECB. First point is all entity eligible to receive FDI. It means those entity who are eligible to receive foreign direct investment as per the FDI policy, they all are eligible under ECB. This is the first point. Second, these are specific authorities as prescribed under this ECB guidelines. Port trust, units in special economic zone, SIDBI, Exim Bank of India. So these are specifically mentioned, and first point is all eligible entity to receive foreign direct investment, they are eligible to receive ECB also. Second, in INR, all entity eligible to receive FCY ECBs means these all entities will cover. All entities eligible to receive FCY ECBs means these all entities are covered. Means those entities who are eligible to receive foreign currency external commercial borrowing in FDI concept or under the 4-point specific, like for example port trust, units in SEZ, SIDBI, Exim Bank, they all are eligible to receive in INR. With addition to that, and a registered entity engage in microfinance activity, that is registered not-for-profit companies, registered societies, trust, corporates, and non-government organization, they are also eligible to receive ECBs, right? Foreign currency loan. So I think so third point is clear. Eligible borrower is clear. It means eligible borrower in case of if you are going to receive ECB in foreign exchange, then 2 types of person. All the person who are eligible to receive FDI, they are eligible. This is the first point. And for second point, what is the mention? The 4 authorities as specifically provided, they are eligible to receive ECB under the FCY. In case of INR FCY, right? So what they have mentioned, that all entities who are eligible to receive in under FCY ECB, they are eligible, plus Section 8 company or society or trust who are doing business for non-profit making. Now, these are the eligible borrowers. Okay, so that point is clear. Now, recognized lender, anybody cannot lend, right? The lender should be a resident of FATF, Financial Action Task Force countries, or IOSCO compliant country. IOSCO means the country who signed that agreement for securities. Compliant country, including on transfer of ECB. However, multilateral and regional financial institution where India is a member country, will also be considered as a recognized lender, right? Individuals as lenders can also be permitted if they are the foreign equity holders or for subscriptions to bond debenture listed abroad. They are also eligible to lend. Bill Gates, right? Foreign branches, subsidiaries of Indian banks are permitted as recognized lenders only for FCY ECB, except FCCBs and FCEBs, foreign branches or subsidiaries of Indian bank, right? Say for example, HDFC branch situated at New York, and that branch wants to recognize as a recognized lender under the ECB guidelines, so they will provide under the FCY denominated currency only. Foreign branches, subsidiaries of Indian banks subject to applicable prudent norms can participate as a arranger, underwriter, market makers, traders for rupee denominated bond issued overseas. Means they will not recognize as a direct party, but they can coordinate for this. However, underwriting by foreign branches, subsidiaries of Indian bank for issuance by Indian bank will not be allowed, right? So they cannot be a direct party for the issuance. However, they can coordinate for such issue. So these are the recognized lender. I think so. Third and fourth point is clear. First, second, third, fourth point are clear. First point deals with the currency format. Second point deals with form. Means you are going to raise by debenture, by bond, by preference shares, or whatever type of instrument you can use for this raising of this one. Eligible borrower means in case of FCY, two types of. First, who are eligible to receive FDI, they all are eligible to receive FCY ECB by default, right? And four type of person included specifically. And eligible borrower and all entities eligible to raise FCY ECB's issue and registered under the section 8 means they are working for the non-profit making objectives. So is there any problem in with respect to point 1, 2, 3, 4? Point 1, 2, 3, 4, is there any problem? Point 1, 2, 3, 4, is there any problem? Let me know. Is there any problem in point 1, 2, 3, 4? If you have any problem, let me know. Then we can proceed towards more part of this. Point 1, 2, 3, 4. All are clear or all clear? Okay. Okay. Moving towards next point. Right? Third, fourth, fifth point. Fifth point is minimum average maturity period, MAP. MAP. Right? So MAMP, right? Means government is quite finding that like whatever is the minimum maturity period, you need to tell today only before raising ECBs, right? In any other currency. So MANP for ECB will be 3 years. What is the minimum time period? Is 3 years. Call and put options, if any, shall not be accessible prior to completion of minimum average maturity. Okay. So in case of derivative instrument, the average duration, the minimum duration is of 3 years only. However, for specific categories mentioned below, the MANP will be prescribed thereunder. Generally, it's 3 years. Average minimum is 3 years, right? However, specifically they have mentioned for others. Now, ECB raised by manufacturing companies. ECB raised by manufacturing company. For example, Ultratech company. Up to USD 50 million or its equivalent per financial year, then MANP is 1 year. That minimum maturity is 1 year. ECB raised from foreign equity holder for working capital purpose. For which purpose? For working capital purpose. If it is manufacturing company and raised up to $50 million or equivalent per financial year, then MAMP is 1 year. ECB raised from foreign equity holder. Foreign equity holder for which purpose? Underline that, for working capital purpose, general corporate purpose, for repayment of rupee loan, then in MAMP is 5 years. Minimum maturity is 5 years. ECB raised for working capital purpose or general corporate purpose, 10 years. On lending by NBFC for working capital purpose or general corporate purpose is 10 years. Means NBFC can raise funds from outside India and they can provide that to the Indian persons, right? So that is 10 years. ECB raised for repayment of rupee loan availed domestically for capital expenditure. Then it's 7 years. On lending by NBFC for the same purpose, that is also 7 years. ECB raised for repayment of rupee loan availed domestically for purpose other than capital expenditure. Okay. On lending by NBFC for the same purpose, 10 years. That is in case of 10 years, right? So this is the minimum average maturity period. First 1 year company, manufacturing company, for working capital purpose by foreign equity holder, 5 years. For ECB raised for working capital purpose or general corporate purpose, 10 years. On lending by NBFC, 10 years. ECB raised for repayment of rupee loan availed domestically for capital expenditure or lending by NBFC for the same purpose, 7 years. ECB raised for repayment of rupee loan availed domestically for purpose other than capital purpose. For capital purpose, that is 7 years. For other than capital purpose, that is 10 years, right? So this is quite dark. For that is 10 years. Okay. So I think so that is clear. For capital purpose, it's 7 years. For other than capital purpose, it's 10 years. For the category mentioned at B2E, other than manufacturing companies, ECB cannot be raised from foreign branches, subsidiaries of Indian bank. Okay. You are not supposed to raise the ECB from which? From Indian banks of foreign branches. The minimum MANP will have to be strictly complied with under all circumstances, right? So this is the first restriction for this MANP is up to 1 year, 5 year, 10 year, 7 year, and 10 year, right? So that you need to learn. Examiner can ask a simple 4 marks question from this part, duration perspective, right? Minimum average maturity period. I think so that point is clear. Fourth point is clear. Minimum average for generally it's 3 years other than prescribed otherwise. For manufacturing company, USD $50 million or equivalent in a financial year, that is 1 year, right? 5 year for foreign equity holder for working capital purpose, it's 5 years. For 10 years, and 7 years. So these all are 5 points. I think so that point is clear. Fifth point is clear. Minimum average maturity period. Minimum average maturity period is clear or not? So first point talks about which part? Currency of borrowing, C. Form of ECB, F. Eligible borrower, B. Recognized lender, L. Minimum average maturity period, M. Right? You can create some mnemonic kind of thing to remember this point. First is currency of borrowing. Second is form of ECB. Third is who are eligible borrowers. Fourth is recognized lender. And fifth is minimum average maturity period. Okay. Now, all-in cost ceiling per annum. Benchmark rate plus 450 BPS spread. Benchmark rate in case of FC by ECB or TC refers to 6-month LIBOR rate of different currencies or any other 6-month interbank interest rate applicable to currency of borrowing. For example, Euro IBOR. Benchmark rate in case of rupee denominated ECB/TC will be prevailing yield of the Government of India securities of the corresponding maturity. Benchmark rate in that case is government security. Like for example, government issues some bond. So what government is offering, that is benchmark rate, base rate. Okay. Next is other cost. Prepayment charges, penal interest, if any, for default or breach of covenants means condition should not be more than 2% over and above the contracted rate of interest on the outstanding principal amount and will be outside the all-in cost ceiling, right? So government has prescribed, like in case of default. In case of default, like for example, some EMI default, right? What we will do? So they will charge an amount of not more than 2% over and above the contracted rate of interest on the outstanding principal amount and will be outside the all-in cost ceilings, right? And a user list, negative list. Negative list is you are not supposed to use the ECB proceeds in following activity. The negative list for which the ECB proceeds cannot be used would include the following, right? Would include the following. First is real estate activity. You are not supposed to, because that will involve some kind of money laundering activity also. So real estate is exclusively prohibited. Invest in capital market, undue fluctuations. Equity market, that is also restricted. Working capital purpose, except in case of ECB mentioned at point 5B and 5C above. General corporate purpose, except in ECB mentioned in 5B or VC 5C above. Repayment of rupee loan, except in case of ECB mentioned, means you cannot use the end proceeds for that negative list purpose. On lending to entities for the above entities, except in case of ECB raised by NBFC, as given in point 5C, 5D, 5E above. So these are the points, right? These are points. Okay, so this is the end user's negative list point. I think so till that 7 point is clear, right? First point is first point is in which currency you are going to currency of borrowing. Second point is form. Third point is minimum maturity period. Recognize lender, right? And recognize acceptors. All in cost, and in case of default, then what extra amount you will charge, that also you need to mention in that agreement part. And end user negative list, first point is real estate, capital market. Two things are important, and equity investment. So these all are 3 points, right? Working capital purpose, except in ECB mentioned form 5B, 5C above, that is restricted, means that is, if this is allowed in ECB part, then it is allowed, otherwise it is restricted. General corporate purpose, except in case of ECB mentioned at 5B, 5C above. Repayment of rupee loan, except in case of ECB mentioned at 5D, 5E above. On lending to two entities for the above activities, except in case of ECB raised by NBFC as given at 5C, 5D, 5E above, right? So I think so that is clear, right? End users negative list is also clear. End user negative list is also clear. Kindly comment, we completed the 7 points of ECB part. Is this clear? If you have any doubt till till that lecture, you can ask your doubts. If anybody have doubt, you can ask your doubt. First, second, third, fourth, sixth, seventh point. Till 7 point we completed part. Till 7 point we completed part. So if you have any doubt, let me know. And in the charts, so you need to remember the point like currency of borrowing. This is the first point, right? In the form of ECB. Third is eligible borrower. Who are the eligible borrower? Fourth is recognized. Third and fourth. Third is eligible borrower. Fourth is recognized lender. Minimum average maturity period, right? If you are raising for manufacturing activity, then is 1 year, right? ECB rate for foreign equity holder. That only point you need to remember. For working capital purpose, then it's 5 years. Now, what is the difference in all 3 points? That point talks about that repayment of fourth and fifth point. What is the difference? For capital expenditure and other than capital expenditure, it's 7 years. For capital expenditure, it's 7 years, and for other than capital expenditure means you are talking for some corporate general purpose, then it's 10 years. Right? For category mentioned B2E, ECB cannot raise from foreign branches or subsidies of Indian bank, or the prescribed MANP will have to strictly complied with under all the circumstances. I think so that all clear. Parameter benchmark rate plus 450 BPS spread, other cost maximum 2%, not more than that. And these are the negative list as prescribed under the FEMA part. Negative list of end users means you can raise the ECB, but if you are raising ECB for that purpose, means you are going to invest in the capital market. That is strictly prohibited. You are renting out the, investing that ECB amount in real estate business. That is also not permissible. Okay. So I think so that is clear, right? Move towards this point. Okay. Parameter part. Now, next parameter is exchange rate. Change of currency of FCY ECB into INR ECB can be exchange rate prevailing as on the date of agreement for such change between the parties concerned, or at an exchange rate which is less than the rate prevailing on the date of agreement if consented to by the ECB lender, right? So that is adjustment for exchange rate. For conversion to rupee, the exchange rate shall be the rate prevailing on the date of settlement, right? So these are the point. Exchange rate with respect to change of currency of FCY ECB into INR ECB can be at an exchange rate prevailing on the date of transaction, means you are on the date of agreement for such change between the party concerned, or the exchange rate whichever is less. Hedging provision. Hedging means to mitigate the risk. The entity raising ECBs are required to follow the guidelines for hedging issue, if any, by the concerned sectorial prudential regulator in respect of foreign currency exposure. Hedging is required. Infrastructure space companies shall have a board approved risk management policy. So law has provided that you should have a risk approved policy. Further, such companies are required to mandatory hedge 70% of their ECB exposure in case the average maturity of the ECB is less than 5 years. The designated AD category 1 shall verify 70% of the hedging requirement is complied with during the currency of ECB, and report the position in RBI through form ECB2. You need to report that issue also. The following operational aspect with respect to hedging should be ensured. First is coverage. The ECB borrower will be required to cover the principal. You need to cover with respect to hedging transaction. You need to cover the principal amount as well as the coupon through which financial hedges. Interest rate. The financial hedge for all exposures on account of ECB should start from the time of each such exposure, that is, the day the liability is created in the books of borrower, right? This is the important point. Like the hedging transaction will start from the day the financial hedge for all exposure on account of ECB should start when you booked that transaction in your books of the borrower. This is the first point. Second, tenure and rollover. A minimum tenure of 1 year for the financial hedge would be required with periodic rollover. You can roll over the transaction, duly ensuring that the exposure on account of ECB is not unhedged at any time during the currency of the ECB. So you need to check that that your exposure should always be hedged. Natural hedge. Natural hedge in lieu of financial hedge will be considered only to extent offsetting projected cash flow and revenue in matching currency, net of all other projected outflows. For this purpose, an ECB may be considered naturally hedged if the offsetting exposures have the maturity or cash flow within the same accounting year. Any other arrangement structures where revenues are indexed to foreign currency will not be considered as a natural hedge. That cannot be considered as a natural hedge. And for hedging provision, overseas investors are eligible to hedge their exposure. Right? If we are borrowing ECBs into INR format, then we don't need any kind of hedging. Then overseas need to. In rupee, through permitted derivative product under AD category 1 in India, the investors can also access the domestic market through branches, subsidiaries of Indian bank abroad or branches of foreign banks with Indian presence on a back-to-back basis. Just go through point 10, hedging provision. If you have any problem, you can let me know. Just go through the hedging provision part. Just go to the hedging provision part. Read out the hedging provision part. What kind of hedge required, which date will be considered as a recording date or booking date of such hedge transactions. Overseas investors. In case of INR denominated ECBs, we don't require any kind of hedge. For this foreign investor, or we can say foreign lender, they only require this. Hedging provision, right? What points we considered till date? So this is for end user list, and 9th is exchange rate, and 10th is hedging provision. 9th is exchange rate and 10th is hedging. FCY denominated ECB and INR denominated ECB. In case of FCY denominated ECB, there are 3 points which we need to consider. Coverage, tenure. Tenure will be minimum 1 year, which can be rollover, so that there will not be anything which is unhedged at any point of time. That is important point. Now, next point is change of currency of borrowing. Change of currency of ECB from one freely convertible foreign currency to any other freely foreign currency convertible as well as INR is freely permitted. That is all permitted, right? You can withdraw that amount, you can switch over that amount, and you can adjust accordingly. Change of currency from INR to any freely converted is not permitted. So if a person has obtained any ECBs in INR format, then that is not at all permitted to exchange that foreign currency borrowing. I think so that is clear. I think so that is clear. I think so that is clear. Okay, so that is change of currency. So in FCY that is permissible. You can change in any foreign currency. You can change in any Indian currency. While, however, if ECB is raised in INR, then this change is not allowed. Note, the ECB framework is not applicable in respect of investment in non-convertible debenture in India made by registered FPI. Lending and borrowing under ECB framework by Indian banks and their branches subsidiaries outside India will be subject to prudential guidelines issued by Department of Banking Regulation of the Reserve Bank of India. Further, obviously they need to comply the RBI condition also. Further, other entity raising, other entity means other than banks, are required to comply guidelines issued, if any, by the concerned sectorial or prudential regulator, right? So if any authority is evaluating that project, then you need to concern. In case of bank, Department of Bank RBI guideline you need to comply. For any other entities other than bank, you need to follow your regulator, sectorial regulator. Limit and leverage. Under the aforesaid framework, all eligible borrowers can raise ECB up to USD 750 million or equivalent per financial year under the automatic route. Further, in case of FCY denominated ECB raised from direct foreign equity holder, ECB liability equity ratio for ECB under the automatic route cannot exceed 7:1, right? That does not exceed 7:1. However, this ratio will not be applicable if the outstanding amount of all ECB, including the proposed one, is up to USD 5 million or its equivalent. Further, the borrowing entity will also be governed by the guidelines on debt equity ratio if issued by any sectorial or prudential regulator concerned, right? So that is ECB part, limit and leverage part also. Issuance of guarantee, etc. by banks and FI. So if a Indian bank want to issue any guarantee, issuance of any type of guarantee by Indian banks, all India financial institution, NBFCs relating to ECB is not permitted. Law is clearly specific, right? While framing the guidelines of ECB, they are mentioned that banks should not hit. Further, financial intermediaries like Indian banks, all India financial institution, NBFC, shall not invest in बहुत बढ़िया FCEB and FCC in whatsoever manner it is issued. Okay, so they are not provide any kind of guarantee. In fact, they cannot invest also in FCCBs and FCEBs. Now, that is important point. Parking of ECB proceeds, where you are going to use. ECB proceeds are permitted to be parked abroad as well as domestically in the manner given below. Parking of ECB proceeds abroad. Parking of ECB proceeds domestically. ECB proceeds meant only for foreign currency expenditure can be parked abroad pending utilization. ECB proceeds meant for rupee expenditure should be repatriated immediately for credit to their rupee account with authorized dealer category 1 bank in India. Till utilization, these funds can be invested in following liquid assets. Liquid assets means that can be easily converted to cash. ECB borrowers are only eligible to park ECB. Like for example, deposit CDs, certificate of deposits, or other product offered by a bank rated not less than AA minus by S&P, Poor, Fitch, or Moody's. Treasury bill or other monetary instrument of 1 year maturity having minimum rating as indicated above means AA minus, not less than this rating. Deposit with foreign branches, subsidies of Indian bank abroad, so you can invest. These are called liquid assets or liquid investment, right? That is important. ECB borrowers are eligible to park. ECB proceeds in term deposit with authorized dealer category 1 bank in India for a minimum period of 12 months cumulatively. These term deposits should be kept in unencumbered position, means without any charge. Means free. Okay. Procedure of raising ECB. All ECBs can be raised under the automatic route if they conform to the parameters prescribed under this framework. For approval route cases, the borrowers may approach the RBI with an application in prescribed format, means Form ECB, for examination through their authorized dealer category 1. What is the procedure for raising ECB? So they mentioned that you need to approach to RBI with an application in the prescribed form, that is called Form ECB, for examination through authorized dealer. So first we will reach to RBI with particular form. Form is Form ECB, and RBI will do examination part. Such cases shall be considered keeping in view the overall guidelines. Macroeconomic situations means, for example, there is a war between two countries, then they are not going to evaluate this. Merits of a specific proposal means so that application can be viewed by the RBI in such manner. ECB proposals received in the Reserve Bank above certain threshold limit, refixed from time to time by the RBI, would be placed before the empowered committee set up by the RBI. Okay. The empowered EC stands for Empowered Committee, will have external as well as internal members, and the Reserve Bank will take a final decision in a case taking into account recommendations of Empowered Committee. Entities desirous to raise ECB under the automatic route may approach, and they can approach to authorized dealer category 1 bank with their proposal along with the duly filled in form ECBs, right? So this is the procedure part. Reporting requirement. Borrowing under ECB framework are subject to following reporting requirement apart from any other specific reporting requirement under the framework. Okay, so these are the reporting requirements that we need to comply. Okay, so till this point, I think so many things are clear. If you have any doubt, you can ask your doubts. Till that point, procedure for raising issue. We can say ECB is the most lengthiest topic in FEMA as inserted. That is clear or not? That is clear or not? Is there any problem? Okay. Moving towards. First point, what are the requirements of reporting requirement? First is LRN, loan registration number. Any drawdown in respect of an ECB should happen only after obtaining the LRN from the Reserve Bank. Okay. To obtain the LRN, borrower required to submit duplicate certified form ECB, means you need to submit the second copy to the authority, which also contain terms and condition of the ECB, and with this copy that also contain the terms and conditions for this ECB part. In duplicate to the designated category 1 bank, right, we need to submit that. For LRN, we need to submit that to AD1. In turn, the AD category 1 will forward one copy to Director, Reserve Bank of India, Department of Statistics, Information Management, External Commercial Borrowing Division, BKC, Bandra Kurla Complex, Mumbai 400051. Contact number, perfect. Copies of loan agreement for raising ECB are not required to be submitted to Reserve Bank, right? For this, we obtain the LRN number, loan agreement number. For this, copy of agreement is not required, right? So this is LRN. Change in terms and conditions of ECB. Changes in ECB parameters in consonance with the ECB norms, means with respect to ECB norms, including reduced repayment by mutual agreement between the lender and borrower, should be reported to DISM through revised form ECB at the earliest. Means whatever changes you are doing, you need to intimate. In any case, not later than 7 days from the changes affected, right? Means you can do the changes, and accordingly within 7 days you can intimate to the authority. While submitting the revised form ECB, the changes should be specifically mentioned in the communication. You need to mention that we change the rate of interest, or we change the minimum maturity period to more than that amount. Monthly reporting of actual transaction. The borrower required to report actual ECB transaction through form ECB2 return through the authorized dealer category 1 on a monthly basis, so as to reach DISM within 7 working days from the close of month to which it relates. Changes, if any, in the ECB parameter should also be incorporated in form ECB2 return. Late submission fees, LSF, for delay in reporting. Any borrower who is otherwise in compliance of ECB guidelines can regularize the delay in reporting of drawdown of ECB proceeds before obtaining LRN, or delay in submission of form ECB2 return by payment of late submission fees. You need to pay the late submission fees. Accordingly, that form will be submitted. The borrower through his AD bank may pay the late submission fees, LSF, by way of demand draft in favor of RBI or any other mode specified, means by online mode also, that is permissible. Such payment shall be accompanied with the requisite returns. Form ECB2 returns reporting confirmation will be treated separately. Non-payment of LSF, okay, that will be treated as a confirmation under the FEMA, right? So that is the most important point. Non-payment of late submission fees, if you fail to pay that LSF, then will be treated as a contravention of the reporting provision and shall be subject to compounding. Section 15, adjudication, section 13 and 14, 15, 16, as provided under FEMA or regulation framed there under, right? Then that will be treated as a this part. I think so. Till this LSF for delay in reporting is clear. You can just go through the first 4 points of reporting requirement. First is LRN number we need to take from the government department. There is an address prescribed. Changes, if any changes, we can do the changes. You need to intimate before the changes, or you can first do the changes, then you can intimate within 7 days. Okay. Monthly reporting of actual transaction, ECB2 return, that is the format prescribed, you need to submit. And if the default in submitting, then you need to pay the late submission fees, LSF. And if a person is default, if a person is made any default in payment of LSF, then it will be treated under section compounding and adjudication part, means section 15 or 16 will apply in that case. Just go through these points. If you have any problem, let me know. Go through these points. Go through first, second, third, fourth point, right? If you have any problem, let me know. Or if you have any question till that topic, you can ask it out. This is quite lengthy topic, and whenever you are preparing for examination, but don't complete the topic in a single slot. Just break that topic into 3-4 parts. Then only you can able to retain that ECB provisions. Okay. Fifth point is standard operating procedure, SOP, for untraceable entities. Right. So what they have mentioned, the following SOP has to be followed by designated AD category 1 in case of untraceable entities who are found to in contravention of reporting provision for ECB to submit prescribed returns under the ECB framework either physically or electronically for past 8 quarters or more, right? Who are treated as untraceable entities? The companies, the entities who raise the money through ECBs, and they need to submit the return, but they did not submit within for the last 8 quarters. Then only they are treated as a untraceable entities. Definition: any borrower who raised ECB will be treated as a, means Indian person. Any borrower who has raised ECB will be treated as an untraceable entity if entity, auditors, directors, promoters of entity are not reachable. Perfectly responsive, reply in the negative over mail, letter, phone for a period of not less than 2 quarters. With documented communication reminders numbering 6 or more, it fulfills both of the following conditions. First, entities not eligible to be operative at a registered office address as per the records available with the AD bank, or not found to be operative during the visit by the officials of AD bank or any other agencies authorized by AD bank for this purpose. Entities have not submitted statutory auditor certificate for the last 2 years or more. That is also restricted, right? So we can call that entities are untraceable entities. And who are untraceable entities? And untraceable entities are those entities who fail to submit their 8 quarters or more information to the RTI. With 6 reminders, they sent a 6 reminder. Then too you are failing to submit, then these are untraceable entities, right? Next, action. The following actions are undertaken in respect of untraceable. Now, what will they do for this untraceable entities? So file revised form ECB 2. File revised form ECB if required. And last form ECB 2 return without certification from company with untraceable entity written in the bold of the top, right? You need to mention that untraceable entity on the top of the letter. The outstanding amount will be treated as written off from external debt liability of the country, but may be retained by the lender in the books for recovery. Perfectly, right? Maybe that outside entity write off your debt amount, right? But Indian government will not write off, right? They will mention the record book and they will start the recovery part. No fresh ECB application by the entity should be examined, processed by the AD bank. Then further, if you again wish to raise the money through ECB, you are not supposed to raise. Directorate of Enforcement should be informed whenever any entity is designated untraceable, means ED. ED will come into picture, Enforcement Directorate. No inward remittance or debt servicing will be permitted under auto route, means automatic route. Close for yours. Right? So this is fifth point. This is fifth point. I think so fifth point is clear. Examiner can ask a simple, they will frame a question and accordingly they will ask a question from fifth point only, right? Like government has sent a reminder, government failed to send the reminder, what is the case, whether he is liable for it, and after what actions government can take for these entities. These all points. Point number 6. Power delegated to AD category 1 to deal with the ECB cases. The designated AD category 1 banks can approve any request from the borrower for change in respect of ECB except for FCCBs and FCEBs, duly ensuring that the change conditions, including change in the name of the borrower, lender, transfer of ECB, and any other parameter, comply with the extent ECB norms and are with the consent of the lender. You need to take the approval of the lender. Further, the following can be undertaken under the automatic route. Pehla, first point. Change in AD category 1 bank. AD category 1 bank can be changed subject to obtaining NOC. NOC you need to from the existing AD category 1. Means the dues amount. If there is any dues amount of AD category 1, first you need to satisfy the dues, then accordingly you can change the AD category 1. Then accordingly you need to cancel the LRN number. The designated AD category 1 bank may directly approach to DSIM for cancellation of LRN for ECB contracted, subject to ensuring that there no drawdown against the said LRN has been taken place and monthly return filed till date. Till date they have filed the monthly return. Refinancing of existing ECB. Refinancing of existing ECB by fresh ECB, provided the outstanding maturity of the original borrowing, that is weighted outstanding maturity in case of multiple borrowing, is not reduced, and all-in cost of fresh ECB is lower than the all-in cost of weighted average cost in case of multiple borrowing part of existing ECB. Further, refinancing of ECB raised under the previous ECB framework may also be permitted. Okay, so you took any earlier one ECB loan. Now you are doing for refinancing option. Subject to additionally ensuring that the borrower is eligible to raise ECB under the extent framework. Raising of fresh ECB to part refinance the existing. Raising of fresh ECB to part refinance the existing ECB is also permitted, subject to the condition. Mean government will check whether the person is a compliant person or not. Indian banks are permitted to participate in refinancing of existing ECB only for highly rated corporates, AAA, and for Maharatna and Navratna PSUs. Okay. Indian banks are permitted to participate in refinancing of existing ECBs for highly rated corporates. Like for example, maybe Reliance is the highly corporate, or Tata we can say, right? For Maharatna or Navratna PSUs, right? They are exclusively covered. So this is third point. Conversion of ECB into equity. Conversion of ECB, including those which are matured but unpaid, into equity is permitted subject to the following condition. You need to comply the condition part. The activity of the borrower component company is covered under the automatic route for FDI or government approval is received wherever applicable for foreign equity participation as per the extent FDI policy. So that is conversion of ECB into equity part. So first you need to comply the FDI policy norms. The conversion, which should be with the lender's consent and without any additional cost, should not result in contravention of eligibility or breach of applicable sector cap on foreign equity holding under the FDI policy. Applicable pricing guidelines for shares are complied with. In case of partial or full conversion of FCB into equity, the reporting to the Reserve Bank will be as under. For partial conversion, the converted option is to be reported in FCGPR prescribed. That form you need to remember, right? In form FCGPR prescribed for reporting of FDI flow, means that form is used by the FDI flow, right? While monthly reporting to DSIM in form ECB2 return will be a suitable remark like ECB partially converted to equity. You need to provide that remark also with ECB2 return. For full conversion, the entire portion is to be reported in FCGPR. While reporting to DISM in ECB2, subsequent should be done with remark ECB fully converted to equity. Subsequent filing of form ECB2 return is not required in that case. For conversion of ECB into equity in phases, reporting through form FCGPR and FC2 will also in phases. If the borrower concerned has availed of other credit facilities from the Indian banking system, including foreign branches, subsidiaries of Indian Bank, the applicable prudential guidelines issued by Department of Banking Regulation of RBI, including guidelines on restructuring, are complied with. Consent of other lenders, if any, to the same borrower is available, and at least information regarding conversion is exchanged with other lenders of the borrower part. For conversion of ECB dues into equity, so that all points deal with the conversion part. You need to provide the information with respect to conversion, whether it's a fully convertible or partly convertible. The exchange rate prevailing on the date of the agreement between the parties concerned for such conversion or any lesser rate can be applied with a mutual agreement with the ECB lender, right? It may be noted that the fair value of equity shares to be issued shall be worked out with reference to date of conversion only, right? So this is the point which we need to take care of this one, right? So with this, we completed this conversion of ECB into equity part also. Okay. So now we are, this is the more than 60% of the ECB conversion. Like what conversion is there? What is the process for issuing? What is the format for this ECB guidelines? Okay. So that all we have completed this one. So we will take a break of, do one thing, just go through that ECB part, what we have completed till time. So you can just go through that part. If you have any problem, you can ask after the break only, right? That will help you to retain that topic in a sequential manner. So we will resume after 20 minutes, right? So you can just go through that ECB part. If you have any problem, you can ask it out, and you need to read again and again that ECB part. Then only that will be a sufficient part. So 8:40 is our resume time. other part. Okay, so fifth part is security for raising ECBs. So authorized dealer category 1 banks are permitted to allow creation or cancellation of charge. Now, suppose for example, a foreign entity or recognized lender issued some or provide some kind of borrowing to the person resident in India, but that is purely guaranteed in nature, means secured loan kind of. So they will create a charge, means Indian entity will create a charge on its immovable assets, movable assets, financial securities, issue of corporates and personal guarantee in favor of overseas lender, security trustee to ensure the ECB to be raised or raised by the borrower subject to satisfying themselves that. First point, the underlying ECB is in compliance with the extent ECB guidelines. You need to check whether the ECB complies with the ECB guidelines. First point, there exists a security clause in the loan agreement, means a charge clause. If you have any problem till what we completed in the ECB part, you can ask your doubt. Okay. So there exists a security clause in the loan agreement requiring the ECB borrower to create, cancel charge, means satisfaction of charge also in favor of the overseas lender, security trustee on immovable assets, movable assets, financial securities, corporate issuance of corporate and personal guarantee. So if you are with respect to CHG charge concept, right? So we will create a charge on immovable property, movable property, financial security or corporate guarantee or individual guarantee also. NOC as applicable from the existing lenders in India have been obtained in creation of charge. Obviously, suppose for example, you are providing some property to the foreign lenders and that property belongs to, for example, 50 crores. On this same property, you obtained a loan from SBI of 10 crore rupees and for rest of, for example, 30 crore you are raising via ECB from outside lender. So law has clearly specified first take NOC from this SBI bank. Accordingly, you need to provide that NOC to the foreign lenders also. Once the aforesaid stipulations are met, means conditions are fulfilled, the AD category 1 bank may permit creation of charge on immovable assets, financial securities, issue of corporate or personal guarantee during the currency of ECB with security co-terminating with underlying ECBs, subject to following. First point, creation of charge on immovable assets. The arrangement shall be subject to following. First point, such security shall be subject to the provision in the Foreign Exchange Management Acquisition and Transfer of Immovable Property in India Regulation 2017 as amended from time to time, that you need to comply. The permission should not be constructed as a permission to acquire immovable property assets in India. Okay, because you cannot invest, ECBs are strictly prohibited as end use in real estate activity. So that point is important, that permission will not be constructed as permission to acquire immovable property. You can only create a charge on that immovable property, but foreign entity is not able to invest in the immovable property, right? In the event of enforcement or invocation of charge, the immovable assets property will have to be sold only to person resident in India. Now you can relate both the points. In end user point, that is specifically restricted, like ECB cannot be used for the purpose of real estate activity. And if a charge is created on the assets or the property, that is called immovable property, and say for example the Indian person fails to repay that amount to foreign recognized lender, he will exercise his revocation of charge or he will exercise his execution of charge. So he will sold out the property. Then law has mentioned that first you need to sold such assets, means charge assets, only to a person resident in India. And The sale proceeds shall be repatriated to liquidate the outstanding ECBs. A recognized lender is only eligible to receive this amount. He is not eligible to receive that assets. Creation of charge on movable assets. In the event of enforcement, invocation of the charge. Enforcement or invocation means the Indian person fails to repay that loan amount. The claim of the lender means foreign company, foreign recognized lender. Whether the lender takes over the movable assets or not, otherwise will be restricted to outstanding claim against the ECB. Encumbered movable assets may also be taken out of a country subject to getting NOC from the domestic lenders, if any. Remember one thing, movable assets they can take with them, no issues at all. But in case of immovable assets, that needs to be first sold to the person resident in India. You can take the proceeds of that assets. Creation of charge over financial securities. Okay, so financial security, there is also end use restricted that you cannot invest in capital market. The arrangement may be permitted subject to following. Pledge of shares of the borrowing company held by the promoter as well as domestic associate companies of the borrower is permitted. You can pledge such share, but you cannot force the like register of member, the name of the recognized lender will be changed. No. Pledge on other financial securities like bond, debenture, government securities, government savings certificates, deposit receipts of securities, units of UTI or any other mutual fund standing in the name of ECB borrower is also permitted. Right? Pledge is permitted. In addition, security interest over all current and future loan assets and all current assets including cash and cash equivalent, including rupee account of the borrower with authorized dealer in India, standing in the name of borrower promoter can be used for the security for ECB. The rupee account of the borrower promoter can also be in the form of escrow management or debt service reserve account. In case of invocation of pledge, transfer of financial security shall be in accordance with the FDI policy, including provision relating to sectorial cap. Means, for example, insurance sector, there is a cap of 49%, I think so, right? So you can invest up to 49%, so you can acquire the securities within the limit of 49% only. So you need to provide the regulations also. Issue of corporate or personal guarantee. The arrangement shall be subject to following. First point, a copy of board resolution for the issue of corporate guarantee for the company issuing such guarantee, specifying name of the officials authorized to execute such guarantee on behalf of the company. You need to mention the name, or in individual capacity should be obtained. Specific request from individuals to issue personal guarantee indicating details of ECB should be obtained. Such security shall be subject to the provision contained in Foreign Exchange Management Guarantee Regulation 2000 as amended from time to time. ECB can be credit enhanced, guaranteed, insured by overseas parties only if they fulfill the criteria of recognized lender under extent of ECB guidelines. There are certain additional requirements also. While exercising the delegated power, the AD Category 1 bank should ensure that, first point, the changes permitted are in conformity with the applicable ceiling guidelines and the ECB continues to be compliant with the applicable guidelines. You need to comply the guidelines part. It should also be ensured that if the ECB borrower has availed of credit facility from Indian banking system, including foreign branches, subsidiaries of Indian Bank, any extension of tenure of ECB, whether matured or not, shall be subject to prudential norm issued by the RBI department. The changes in the terms and conditions of ECB allowed by the AD under the powers delegated or the changes approved by the Reserve Bank should be reported to DSIM. Special dispensations under the ECB framework. ECB, okay, these are for special categories of investors or categories of businesses. So first point deals with the ECB facility for oil marketing company, Reliance. Notwithstanding the provision contained in para 2.1, 8th para, 2.1, 10th, 2.2 above PSU oil marketing companies, BPCL, can raise ECB for working capital purpose with minimum average maturity of 3 years from all recognized lender under the automatic route without mandatory hedging and individual limit requirement. It means this is a particular exception provided to oil marketing company that they can raise ECB for a minimum maturity period of 3 years. If you can see the 2.1, 2.1, 10 and 2.2, that talks about the minimum maturity period. So minimum maturity period is altogether different, right? The overall ceiling for such ECB shall be USD 10 billion or equivalent. However, OMC stands for Oil Marketing Companies, should have a board approved forex mark-to-mark procedure and prudent risk management policy for such ECBs. All other provision under the ECB framework will be applicable to such ECBs only. Right. So this is specific to oil marketing company. Maybe examiner will ask a 2 marks question for, like, for example, any other company, there is a time period of 5 years, 1 year, 10 years, 7 years, 10 years. But for oil marketing company, what is the minimum average maturity period? MAMP. So it's 3 years only for startup. ECB facility for startup. AD category 1 banks are permitted to show startups to raise ECBs under automatic route as per the following framework. First, eligibility. An entity recognized as a startup by the central government as on the date of raising ECB. Entity should be recognized as a startup. Maturity. Minimum average maturity period is 3 years. Same for OMC companies, oil marketing companies. Recognized lender. Lenders, investors shall be a resident of FATF compliant country. However, foreign branches, subsidiaries of Indian banks, overseas entities in which Indian entity has made overseas direct investment as per the extent overseas direct investment policy will not be considered as recognized lender under this framework form. The borrowing can be in the form of loans, non-convertible, optionally convertible, partially convertible preference shares, currency. The borrowing should be denominated in any freely convertible currency or Indian rupees or any combination thereof. In case of borrowing in INR, the non-resident lender should mobilize INR through swap, change, or outright sale undertaken through an authorized dealer category 1 bank in India. Amount. The borrowing per startup will be limited to USD 3 million. Startup, they have fixed the limit of 3 million. Or equivalent per financial year, it's $3 million, right? Either in INR or any convertible foreign currency or a combination both. All in cost shall be mutually agreed between the borrower and the lender. End users for any expenditure in connection with the business of the borrower. Conversion in equity means the all point with respect to ECB guidelines, they just cut or short the provision as applicable to startup companies. Conversion into equity is freely permissible subject to regulations applicable for foreign investment in startup, right? Security. The choice of security to be provided to the lender is left to the borrowing entity. Security can be in the nature of movable, immovable, tangible assets, including patents, intangible IPR, financial security, etc., and shall comply with the FDI, FPI, any other norms applicable to foreign lenders, entities holding such security. Further, issuance of corporate and personal guarantee is allowed. Guarantee issued by non-resident is allowed only if such party qualifies as lender under the ECB for startup. However, issuance of guarantee standby letter of credit, letter of undertaking, letter of comfort by Indian Bank, all Indian financial NBFC is not permitted. That is already restricted. Hedging provision for startup. The overseas lender. Hedging provision. The overseas lender in case of INR denominated ECB will be eligible to hedge its INR exposure through permitted derivative product with authorized dealer category 1 bank. So if you raised ECB in INR, you can hedge with the AD available instrument with the AD category 1 bank. The lender can also assess the domestic market through branches, subsidiaries of Indian bank abroad, branches of foreign bank with Indian presence on back-to-back basis. Note, startup raising ECBs in foreign currency, whether having natural hedge or not, are exposed to currency risk due to exchange rate movement, and hence are advised to ensure that they have an appropriate risk management policy to manage potential risk arising out of ECB. Conversion rate. In case of borrowing in INR, the foreign currency INR conversion will be a market rate as on the rate of the agreement. Other provision like parking of ECB proceeds, reporting arrangement, power delegated to AD bank, borrowing by entities under the investigation, conversion of ECB into will be included in the ECB framework, so that we need to comply only. However, provisions on leverage ratio, ECB liability, equity ratio will not be applicable. Further, startups are defined above 8.21. Other startups do not comply with the aforesaid definition but are eligible to receive FDI can also, means those who are eligible to receive FDI, they are eligible to receive ECBs. 9th point. Borrowing by entities under investigation means they have committed some kind of contravention, right? So first is oil marketing company, second is startup, and third is borrowing by companies who are under investigation part. All entities against which investigation adjudication means defaulting companies under the FEMA, appeal by the law enforcing agencies for violation of any provision of the regulations under the FEMA pending, may raise ECB as per the applicable norms if they are otherwise eligible, notwithstanding the pending investigation, adjudication, appeals without prejudice to the outcome of subject. So they are also eligible to receive ECB. If they are otherwise eligible, notwithstanding the pending, means that pending investigation, adjudication, appeal will not come barrier while raising the ECB part. Law is simplified that you are supposed to raise the money from China, then why we will restrict you? It depends on you and China country, right? So the borrowing entity shall inform about the pendency, but you need to inform that to the AD category 1 RBI as the case may be. Accordingly, in case of all applications where the borrowing entity has indicated about a pending investigation, adjudication, appeals, the AD category 1 banks, Reserve Bank, while approving the proposal, shall intimate the agencies concerned by endorsing a copy of the approval letter. So this you need to take care. Right? 10th point. ECBs by entities under restructuring. ECB's facilities for refinancing stressed assets. An entity which is under a restructuring schemes, corporate CIRP process can raise ECB only if it is specifically permitted under the, means if the resolution plan under the IBC allows to raise that ECB, then you can raise, no problem at all. Eligible corporate borrowers who have availed rupee loan domestically for capital expenditure in manufacturing and infrastructure sector and which have been classified as SMA2 or NPA can avail, means if your account is defined in a SMA2 category or NPA category, can avail ECB for repayment of these loans under one-time settlement with lender. Lender banks are also permitted to sell through assignment such loans to eligible ECB lenders provided the resultant external commercial borrowing complies with all-in cost, minimum maturity time period, minimum average maturity period, and other relevant norms of ECB framework. Foreign branches, overseas subsidiaries of Indian banks are not eligible to lend. No, they are not eligible to lend for our purpose. The applicable MAMP will have to be strictly complied under all these circumstances. Eligible borrower under the ECB framework who are participating in the CIRP under IBC code 2016 as resolution applicant can raise ECB from all recognized lenders, foreign branches, subsidiaries of Indian banks for repayment of rupee term loan of the target company. Such ECBs will be considered under the automatic route. You are not supposed to take part in the automatic route. Dissemination of information for providing greater transparency. Information with regard to name of the borrower, amount, purpose, maturity of ECB under both automatic and approval routes are put on RBI website on a monthly basis with a lag of 1 month to which it relates. And 12th point is compliance with the guidelines. The primary responsibility for ensuring the borrowing is in compliance with the applicable guideline is that of the borrower concerned. The responsibility lies with the borrower concerned. Any contravention of the applicable provision of ECB guideline will invite penal action under the FEMA. So if a person is committed in contravention under the ECB raising of loan from externally, then that will attract the contravention of FEMA. The designated AD category 1 bank is also expected to ensure compliance with applicable ECB guidelines by their constituents, right? So this is the ECB part. Now we will move towards, so this is all about the ECB part. We completed the ECB part. Now we will do one thing. We will discuss some case studies or some practical problem as mentioned in our module part. Okay. Okay. So page number 73 in your module part. Okay. So page number 73 in your module part. Some questions as previous examination questions are there. So we will discuss these questions with respect to FEMA part, right? First question. Printex Computer is a Singapore-based company. Okay, if you have any doubt with respect to FEMA, any of the concept, you can make your doubt in this session only. Printex Computer is a Singapore-based computer. Okay. Having several businesses units all over the world, it has a unit for manufacturing computer promoter with its headquarter in Pune. Okay, Pune headquarter. Okay. It is a branch in Dubai, which is controlled by the headquarter in Pune. What would be the residential status of the FEMA for printer units in Pune and that of Dubai branch, right? So what would be the Pune status and Dubai branch? By Dubai is situated in the Indian residence, so that can be treated a person resident in India, and Dubai is controlled by Pune branch, So that is also a person resident in India, right? So this is the definition as prescribed. You can refer to section 2V, 2V, 25, whatever we can say, right? Okay. Mr. Sen, second question. Mr. Sen, an Indian national, desire to obtain foreign exchange for following purposes, right? First, remittance of US dollar 50,000 out of lottery winning on a lottery tickets. No, that is not allowed, right? Current account transaction, first schedule, first point, specifically prohibited remittance of lottery income to a place outside India, right? So that is not allowed. US dollar 1 lakh for sending a cultural tour on a tour to USA. You need to take the approval of central government. Second schedule talks about the current account transaction, section 5. Okay. So that is permissible. Okay. Question third. Okay. Question third. State what kind of approval is required for following transaction under the FEMA Act 1999. X, a film star, wants to perform along with associates in New York on an occasion of Diwali for Indian residents at New York. Okay. Foreign exchange drawal to the extent US dollar 20,000 is required for that purposes. Whether it is do so, whether he can withdraw that amount. Again, this is a cultural trip. For this, you need to take the approval of central government. Second schedule of current account transaction will get attracted. Third question, second, R wants to get his heart surgery done at United Kingdom. Up to what limit foreign exchange can be drawn by him, and what are the approvals required? That will hit schedule third limit of $2.5 lakh, right? If you can recall the current account transaction part. Referring to the provision of the Foreign Exchange Management Act 1999, examine whether Mr. V, an exporter, is bound to make declaration of gift of jewelry value 20. No, it's up to 5 lakh, that is exempt. Rule 4, if you can remember that, right? So regulation rule 4 starts with the up to 5 lakh rupees in value, right? That is no declaration is required, right? So no declaration is required. You can take with you, right? No declaration. Okay. Referring to the provision of the FEMA 1999, state the kind of approval required for following transaction. M requires US dollar 5,000 for remittance towards hiring charges of transponders. Right? Again, that falls under schedule second. You need to take the approval of central government. P requires US dollar 2,000 for payment related to callback services, prohibited transaction, schedule first, current account transaction. Question 6. Suresh resided in India during the financial year 13-14. He resided in India for the full financial year 13-14. So he will be a resident in India, person resident in India for the financial year 14-15, right? Previous year 13-14, more than 182 days. He left on 15th July 2014 for Switzerland for pursuing higher studies in biotechnology for 2 years. Okay. What would be the status? For the 14-15, he will be a person resident in India, and for 15-16, person resident outside India. The simple logic is because for the 15-16 financial year, for 14-15, he is not in India. Mr. Suresh require every year USD 25,000 towards tuition fees and $30,000 for incidental stay expenses for studying abroad. Is it possible for Mr. Suresh? Yes, you can withdraw, no issue for higher education. Schedule 3rd up to $2.5 lakh, it is permitted. Question 7. First, Mr. P has won a big lottery and wants to remit US. No, nothing, not allowed. Mr. Z is unwell and would like to have a kidney transplant done in USA. He would like to know the formalities required and the amount that can be drawn as a foreign exchange for medical treatment abroad. Up to 2.5 lakh he can withdraw, no issues at all. For 3rd is scheduled 2.5 lakh. Mr. Rohan, an Indian resident individual, resides to obtain foreign exchange for the following purposes, right? For the following purposes: US dollar 1,20,000 for studies abroad on a basis of estimate given by the, yes, it is allowed. Gift remittance up to gift remittance US dollar, maximum you can remit up to 5,000, right? 5 lakh rupees. So if you convert this into rupees, if that comes to if that gift exceeding US dollar, okay, so that is also permissible, right? So that is okay, that is not export of goods and services. So that also hit with the 3rd transaction of 2.5 lakh, and the limit is cumulative part, right? Remember this thing. So this is all our FEMA discussion. So we cover each and every sections of the FEMA as applicable for CA final, right? CA final law part. If you have any doubt, you can ask your doubt in the ICAI portal VCC app with respect to any problem or with respect to any doubt in the FEMA topic. So we discussed the module part, we discussed the examination question part also. So examiner, now what is important for the examination part? This is quite important. First, don't forget to always PRII is the most important concept. Adjudication part is also most important concept, right? First, try to complete whole FEMA. Then out of 3 topics, first topic is external commercial borrowing. Second topic is ODI, overseas direct investment. And third topic is import of goods and services, right? First complete ODI, then complete import of goods and services, then move toward the ECB part, right? And in ECB part, try to focus on specific companies of first 12 points, right? That's all from my side with respect to FEMA. If you have any doubt, you can just drop a mail to ICI, then I will answer accordingly. Okay, notes, charts, each and everything is already uploaded on the portal only, right? So that's all from my side. Thank you.